Hello, today is Wednesday, 15th day of January 2014. My name is Derek. We'll take a look at the silver chart in just a little bit. But before we do, ZeroHedge.com, 1 week into 2014, United Kingdom Royal Mint runs out of gold coins. TheVictoryReport.org, U.S. Mint limits production due to shortage. StoryLink.com, U.S. Mint sells out of Silver Eagles, stops production. SilverDoctors.com. Silver down 36% in 2013 despite skyrocketing demand. Perth Mint sales surge 41%. Every single one of these 4 articles can easily be found by searching them, and were all produced this year in 2014. We can see very clearly that the supply and demand issue states supply is low, demand is high. Let's move this on to the daily chart. Well, we can see here that, well, it looks as if supply is high and demand is low because it's in a downtrend, but obviously manipulated market. I think it's something like 4 of the top largest financial institutions, bankers get to control it. That's why this chart is not moving, as supply and demand measures should justify so. Anyway, let's take a look at what I see within the chart movement, starting off from the top of 2512 from the end of the summer of last year. Downtrend, obviously tried to break the downtrend here. The 18 average band was rising. There's a manipulated day. Heck, every day is manipulated, but throwing that aside, down day, resisting the 18 average band for a week and change, breaks down some key levels of support, bear market below the 18 average of bands for 2 months. Now it's been a couple of months of going sideways with the upper range in the area of about 20 1/3 and the lower range in the area of about 19 1/3. So about a $1 range within it. And some interesting aspects that have came into play, which is really this move and this move. For on New Year's Eve of 2013, breaks down below this low, but did stay above the 1821 low from last summer. And then it comes up making a matching high to here, higher low, and now a higher high. So the possibility of the failed breakdown is now into play, which usually would end this range, thus making bull market, bear market, as the possibility failed breakdown, possibility failed breakout. For me, there is no way of knowing which direction this is going to move from here. You can't go by fundamental supply and demand analysis. You can go by fundamental what the bankers want to do, but you got to know information to gauge your decisions from that point on. After all, they made the market go from 50 in 1980 down to 5 in 82 and kept it there for about a quarter of a century. I don't know what they're capable of, but they were definitely capable of that within its time. But overall, right now, in the sideways action, upside targets, first Fibonacci level, 21, 22.5, and then the previous high above that is 25. Downside targets, of course, at the bottom of this range, then this low in here, which is 1872, with the 1821 low from the summer, and then levels below that around 16. But for now, very difficult to place. It's obvious that the people want their physical silver with the shortages running into play, and the supply is having a very difficult time meeting the demands that are required. Thank you for tuning in to today's video, and have yourself a great day. Bye-bye.